5 years ago today, the BBC learned of a crisis at Northern Rock Bank. What happened that evening and over the days to come signalled the start of the worst credit crisis this country's ever seen. The run on Northern Rock, the eventual nationalisation of it and other banks, was something no one saw coming. Tonight we revisit the decisions that were made during that crucial period and ask if they were the right ones and what precedent they may have set for the way we deal with economic crises in the future. In a moment, we speak to the architect of the bank bailouts, the former Chancellor Alistair Darling. First, Paul Mason's reflections.
I can announce today that following discussions with the Governor of the Bank of England and the Chairman of the FSA, should it be necessary, we and the Bank of England would put in place arrangements that would guarantee all the existing deposits in the Northern Rock Bank.
This was the day Alistair Darling finally guaranteed the deposits of Northern Rock savers. Outside a Northern Rock branch in Golders Green, it was the day a decade of political spin collided with Labour's reputation on economic management.
I am quite sure in the 50s and the 60s, if a Chancellor stood up and said, your money is safe, that would be the end of the conversation. But here in 2007, nobody believes the Chancellor.
Why not?
Because Mr Blair's told too many lies.
If you look at the cuttings files for 2007, there's not many people who actually predicted there was going to be a crash. One bloke did. He wrote, "What was first shrugged off as a correction is being seriously monitored as a potential crash. The fear is that when high-risk investments come unstuck, huge leverage will amplify the losses, which will then cascade over to the banks that lend the money." Now, who wrote that? Well, me. So why, 6 months later, was I surprised when Northern Rock went bust? I'd covered the dot-com boom in the 1990s, and I became convinced the technology-driven upswing it promised was real. The second reason is banks and bank regulation are opaque. You're not supposed to know a bank is going bust until it does. The FSA said its supervision of Northern Rock was basically a fiasco. It involved, quote, a level of engagement and oversight by supervisory line management below the standard we would expect for a high-impact firm. By the time RBS was going bust 1 year later, things had become more fluid. I was getting calls 3 days before the event saying RBS can't meet its overnight commitments. But you can't report rumour, and they were unsubstantiated. But even a year later, when Lehman Brothers went bust, if I think back to what was in my head, I did not grasp the catastrophe that was to come. By August 2008, I had people telling me a major bank was going bust. I blogged that this was being rumoured and was greeted with a storm of abuse. Report facts, not speculation, said the commenteers.
Is this a repeat of the great crash, Paul?
In theory, the loss of Lehman, the takeover of Merrill, on top of Bear Stearns, on top of Fannie and Freddie, the bailouts there, should, in theory, be able to lay the basis for recapitalising the banking system and, in maybe 1 or 2 years, the easing of the credit crunch. But that's the theory, because we still don't know how many big, nasty possibilities there are out there. So why, even on the day Lehman Brothers went bust, did I still think we would avoid a crash? Thinking back, because the experts tell you there is a technical fix that won't stop a recession, but will probably stop a crash, you tend to assume the politicians and the regulators will do it. But they didn't. We know a lot more now than then about the structural problems we face. But for me, the past 5 years have come to seem less like a deep crisis of capitalism, more like a fiasco of politics and regulation. That's what the people outside Northern Rock were worried about on that fateful day, and they might have been right.
Paul Mason there. Well, the former Chancellor Alistair Darling once described his life as a couple of decades in politics, followed by 4 years as a bank manager. He oversaw the Northern Rock crisis and is with me now. Thanks very much for coming in. And when you sort of revisit, when you see those queues outside Northern Rock, the branches on Friday morning, that would have been tomorrow morning, 5 years ago, it must have been a heart-stopping moment for you and the government.
Well, it was. I mean, you know, you see these scenes in different parts of the world and you think, oh, someone should do something about it. And then I suddenly thought, that's me, I'll have to do something about this, because if we don't stop this, people will rapidly lose faith in the government. They will start to panic. People honestly believed that they ought to get their money out. And the days when, you know, a politician can stand up and say, I'm a politician, trust me, your money's safe, I think are gone. We had the 24-hour television, which of course compounds the problem because people see the same thing coming up on the screen and they think there are more and more people queuing up, even though that may not necessarily be the case. But we had to stop it. And, you know, in some ways it had to run its course, but we managed to stop it on the Monday when we had to guarantee every single penny that was in Northern Rock, something that would have been unthinkable even a few weeks earlier.
Did the enormity of what was happening then get to you at the time?
No, I mean, that became more apparent in the following year, 2008. And you have to remember that Northern Rock was actually a symptom of what was going very wrong. Here you had a small bank that got above itself. It had a very aggressive policy for expanding market share. There wasn't enough savers' money to lend to people taking out loans. So what did they do? They went to the American wholesale markets, which were largely funded at that time by some very dodgy financial instruments. And of course, when people panicked in the summer of 2007, Northern Rock ran out of money, and it was the first symptom of a much larger problem that hit not just us, but other countries too the following year.
And the decisions that you started to make at that moment, that you made the Bank of England the lender of last resort, it stepped in. That moment set a precedent, if you like, a prototype for what was to happen thereon.
Well, up to a point, the Bank of England has always been the lender of last resort, but this was the first time that actually announcing that the Bank of England was going to step in, far from reassuring people, provoked sheer panic. But what it did do, and, you know, I've said this before, is that it made Gordon Brown and myself determined that it was never going to happen again, so that when 12 months later I was rung up by RBS and told they had about 2 or 3 hours worth of money left before they would have to shut their doors, we had got a plan, and the key to it was we did far more than people expected, and we did it more quickly.
My point
Something
is, I guess,
that today's European people should understand.
You had decided that banks couldn't fail.
Absolutely.
That there couldn't be a survival of the fittest strategy, that you had to be there. You had to prop up and intervene.
Yes. And the idea in a time of a panic that you can let any bank fail, even a small bank, and Northern Rock was small in the international scheme of things, I think after that, that was no longer possible, because even a small bank going down, the contagion would have spread. Now, even today, in the Eurozone, where, of course, you're seeing the precise opposite, where they're not doing what's necessary, you are getting that panic. And the only way you stop it, as I say, is learn the lessons of what happened in 2008, the following year, with RBS and HBOS and so on. You do more than people are expecting, and you do it immediately.
I want to bring you back to some of the comments at the time. Mervyn King in 2008 said, "I don't believe in a year's time people will look back and say there was any lasting damage to the banking system."
Well, I'm sure lots of people said things at the time, you know, that don't look so great 5 years later. You know, the banking system...
But they've got a lot of power now. If anything, they've been invested with more power, not less, right?
You know, I think there were mistakes made, you know, at government, at the regulatory level. The Bank of England was slow off the mark, and yet, you know, 12 months later, it had recovered slightly. I mean, I think the idea that simply replacing the present system and putting the Bank of England in charge will automatically mean everything will be fine is, you know, I think that's fanciful. But, you know, I just hope that regulators have learnt their lesson. Unfortunately, as I say, if you look across the channel, I'm afraid there's not too much evidence that they have.
What about chancellors? I mean, there's lots of speculation as to whether George Osborne will break his own rule now, what you called your golden rule on the debt to GDP ratio. Should he?
Well, I don't know whether he will, but I think that there's a growing chance that that's the case. I mean, I think that...
Does he ever call you up and talk to you and ask for advice?
No, nor would I expect him to. I mean, you know, I think he said his current rules are a sort of gold standard of fiscal rules. Well, that's not a great example, because the gold standard is something that people jump on and off, or have done in the past. The real problem we have in this country, it isn't just a banking crisis, but I mean, you have to look at the other side of things. We have a real problem in relation to the economy. Austerity alone will not work. It's not working in Spain, it's not working here. The plan that the Chancellor announced in July 2010 is way off course.
But isn't the other
We're
problem
borrowing an awful lot more because we don't have growth.
Isn't the other problem about trust? A lack of trust now for people in banks and institutions and politicians. That's very prevalent now.
Yeah, there is a problem in relation to that, but it's also, if you look here and in other parts of the world, what's really lacking is confidence, because you can't be surprised that an individual looking at today's landscape, or someone in business, says, look, I'm not going to go out and spend money, I'm not going to invest, because I actually think the economy isn't going to recover. And the problem is, the longer you leave this, the more you've actually got to do. And frankly, frankly, you know, I don't believe that building conservatories is the road to salvation of the economy of this country. The Chancellor is going to have to announce something significant if he's going to put a firewall under the problem that is growing now, where you're seeing growth beginning to evaporate, and therefore your borrowing beginning to rise, and maybe your debt too.
And just very quickly before you go, top job at the Bank of England, we'll know tomorrow. Who would you put in the job?
Well, I think there are some good, UK candidates, but I would ask the government to make sure that they look around the world. This is a very big job. It's going to require someone with superhuman abilities, and I think
someone from outside the UK.
Well, yes, and they've been mentioned. People have been mentioned in other parts of the world, but I know there are good candidates in other parts of the world, and I think we need the very best because, frankly, there's going to be a huge job, not just here, but if you look at what's going on with the new European banking system, this is going to require something of a superhuman, and I'm not sure we've got that many in this country.
Alistair Darling, many thanks indeed.
Thank you.
We can discuss this further with the Conservative MP Claire Perry. She was an advisor to George Osborne as Shadow Chancellor at the time Northern Rock crisis. Martin Wolf is an associate editor of the Financial Times and member of the Vickers Commission on Banking. Johanna Kirkland is head of multi-asset investment at Schroders, and Giles Fraser, the former canon of St Paul's and now a parish priest in South London. A warm welcome to you all. Thanks for coming on. And Martin, if I can start with you, it seems sort of 5 years on, we're fighting the same battle, and we're not sure what we've cured, are we?
I think what's become very obvious in the passage of 5 years is that the crisis was a symptom of something deeper, which was, in essence, that the whole Western world, and we were part of that, went on an absolutely huge debt binge. The financial sector grew enormously as part of that. There was a colossal increase in debt in households in particular. And we're now on the other side of this hill, and it's just going down. Every year credit shrinks. The economy, as a result, the private sector economy is essentially flat, as Alistair Darling described it. The same is happening in the US. There's no demand growth. And that's the core of it. And this is a process, as we've seen in Japan. If you don't stop that, that can go on for decades.
I mean, if you put that as a sort of morality issue, do you think we've actually learned anything from it? Do you think we
Well, I think the main thing everybody has learned is that we should never have let this happen in the first place. But it's irrelevant because it did. And this is not something we're going to do again, I think, for decades. We've learned a lesson. Unfortunately, it has left us with an enormous headache, which is how do you get the private sector really growing again, spending when the banks don't want to lend and lots of people don't want to borrow and don't dare to borrow. You see this, it's not just Britain. Basically, the lending machine of the Western financial system has frozen.
Giles Fraser, I mean, this was what led to the Occupy movement, which, of course, was in your backyard at the time of St Paul's. I mean, do you think the banks have a social conscience about any of this?
No, I mean, I think they got caught up in this. I mean, particularly Northern Rock got caught up in this, like, hugely over-optimistic spirit of the 1990s. I mean, it got demutualised the same time Dee Ream is singing Things Can Only Get Better. And it's that idea that everything will always go up, the graph will always go up, you can borrow off the future because, you'll always be bigger enough to... And so that, the idea is the hubris that's there. And that hubris got us into this huge amount of trouble whereby the bank became so big, so arrogant, a small bank, on the wholesale markets, hugely over-leveraged itself, and then it was too big to fail. And then what happens when it's too big to fail is it's welfare state for the rich, and it's, if they make their profits, they're private, and if they make their losses, they're a public responsibility. £21 billion we're left with.
Claire Perry, you're nodding along with that idea of hubris. I mean, shortly after this disaster, George Osborne went to the Conservative Party conference and talked about inheritance tax, and that was his big idea. He completely failed to recognise the economic reality of where we were.
Let's stay with the banking crisis. I was nodding along. I mean, I was a banker many years ago. I was sanitised by motherhood, I have to say, but it was this sense, I think, that common sense had gone completely out of the window.
But you were at the time, you were an advisor to George Osborne. I mean, was there a sense that the Conservatives had completely missed what was happening, even as Alistair Darling was sort of bailing things out.
Well, there was a sense, I think, that the regulatory regime that had been put in place to make sure this sort of thing was spotted, and this was a common sense failure. Northern Rock was too good to be true. It was a very small institution that grew very rapidly and had a business model that should have been flagged up as risky. And thanks to Alistair Darling, who was probably the only member of the last government to come out of this with his reputation even intact, there was a complete failure of regulation. And actually, when the crisis hit 5 years ago, everybody went like that. Nobody knew who was going to be in charge, and there has been a lot of criticism of that. One of the things we have done is say banking is an important thing. There is still this huge need for banking services across the world. It's an important, very important industry for Britain. It has to be regulated better, and there has to be somebody in charge who is prepared to stand up and take responsibility, and we think it should be the Bank of England, and that will be done relatively soon when the legislation changes.
Have we seen that? This sense of better regulation for the banks. I know your bank wasn't one that was bailed out, but do you think there has been a structural change now for banks?
Well, I mean, you know, Schroders is an asset management company, so in that sense isn't a bank, and we really represent, we invest money for the long term for pension schemes. And from our perspective, you know, certainly regulation is something to be welcomed, because ultimately we want sustainable growth. That's what works for people who are trying to allocate capital over the long term.
But if I pull you away, I mean, not just about your own investment house self, but this idea, as we heard from Alistair Darling, that actually there was no question the banks would be bailed out by the governments. At some point, the city's got to decide whether the government is a help or a hindrance, whether they like having the government on their back or not, right?
Yes, I mean, from our perspective, we think that there should have been greater regulation. In particular, it wasn't just a matter of over-optimism. The problem was that this classic problem of greed was combined with the modern problem of excessive leverage and also excessive complexity. And in particular, we have to remember that the problem actually started in the United States. And what happened there was that you had the repackaging of mortgage debt into mortgage-backed securities, so that ultimately the complexity of the system just increased significantly, so that what seemed like a small change in the default rate on mortgage debt in the United States ultimately had catastrophic consequences. So ultimately, all of these areas should have been regulated more heavily, and ultimately that would have resulted in a more stable system, which we would be in favour of. And
I guess this is where Vickers and the changes came in. Do you think things have fundamentally changed?
Well, we certainly wouldn't have made a difference to Northern Rock, because it doesn't come... It's very important. Banks can fail in innumerable ways. There was clearly comprehensive regulatory failure. I don't think it was fundamentally a structure problem. I think it was an intellectual problem. We thought banks were safe and they weren't, and we thought they could manage themselves and they couldn't. So it's clearly, it was a fundamental intellectual mistake. We think that some of the problems with the big universal banks, that was it's the fact that RBS went down, that a bank on that scale goes down, Citi, monstrous banks went down. Those were the real threats. Northern Rock was quite manageable by comparison. So we think we have a way of reducing that problem significantly. And by the way, the government agrees with us.
Well, the collapse of the Rock has had a profound impact on the northeast of England and the people who live there. We're going to talk to the panel a little bit further about the psychological impact it had. But Joe Lynham went to listen to their stories.
Newcastle has many symbols of which it is very proud, including its football club and its brown ale. Northern Rock was also one of those symbols. That's why most of the queues outside branches to get money 5 years ago were not to be found here in Newcastle. In short, Northern Rock was more than just a bank. Susan Tron took out one of Northern Rock's infamous 125% Together mortgages. It seems almost laughable now that someone would be offered a loan worth way more than the value of the home they wish to buy. But financial logic was a different country 5 or 10 years ago.
It was like pennies from heaven. He is a 100% mortgage, a little bit of money to get some furniture and a little bit of money to pay all the rest of your debts off. I thought, that's great, that's wonderful. As soon as I got it, I actually realised it wasn't so wonderful because the repayments were massive.
Like many in the northeast, Susan's inscrutable exterior belies a warm humanity. She's dedicated her entire adult life to Stepney Bank's Stables. It's a charity which supports disadvantaged children in the area, and the lion's share of its income comes from the Northern Rock Foundation. But since the demise of the bank, the charity has scaled back radically, and Susan has just been told that she too is being made redundant.
I don't think I've come to terms with it. It's probably a little bit like bereavement. That's the only way I can describe it. When you're in complete shock, I feel really flat. I haven't really thought through what the future holds. I'm sure I'll feel cross, I'll feel excited about new doors opening, but mostly I just feel incredibly sad.
Despite facing her own jobless future, Susan's thoughts turn to those in the area less well off than her.
I get a sense of people still desperately trying to cling on to what they've got, desperately trying to reinvent themselves, desperately trying to fight back. And some of them will be successful, but I do feel there's a sense of incredible sadness as many talents, skills, staff, volunteers, they're just lost forever.
A few miles away in leafier parts, Sylvia Murphy enjoys her retirement on the golf course. She had hoped to have more money to spend in her dotage, and she would have had, but for the scale and speed of Northern Rock's collapse, which caught her and the rest of us by surprise.
I felt let down, and I couldn't believe what was happening. I couldn't believe that the bank was going to collapse.
Sylvia got 1,000 shares from Northern Rock when it transformed itself from being a boring building society into an exciting bank. Those shares, once valued at £12,500, are now worthless, and she blames the former Prime Minister and his Chancellor.
Richard Branson put an offer in, and one other person put an offer in for the bank before it became nationalised. I mean, really, Gordon Brown and Alistair Darling stole my shares.
There's a big gap and areas of immense despair and immense isolation from the national economy, really.
Before being the Bishop of Durham, Justin Welby used to be a derivatives trader. He'll need both experiences as a member of the new Parliamentary Commission on Banking Standards set up in the wake of the LIBOR scandal.
Food banks are a relatively new thing. I always associated them with the United States. But we are seeing really significant demand on food banks all over my diocese, all over this area. And particularly in the last 18 months, we're seeing a sharp increase in demand for food banks. The other thing that we are increasingly seeing is demand from people who are working but not earning enough to actually feed the family right the way through the month.
Let's pick up on some of those thoughts. We're back with the panel again, and if I can start with you, Giles Fraser. That phrase that was used, financial logic, was a different country. The days where you borrowed 7 times your salary and you had nothing really to show for it. This idea of progress, that our children would be better off than we are, doesn't exist anymore for a lot of people.
Well, no, and yet people are still... I mean, I still think that sort of optimism and that sort of rather gung-ho thing is still about in the city, which is that I think there's a dangerous thing. I mean, when I was asked to come on this programme, it was 5 years ago. I said, really, 5 years ago this happened? Because it seemed like it was so recent, because the problems seem to be exactly the same. And I think the problems are that, I mean, and this is as a non-economist, I'm not a specialist, but for people like me, we want to see our banks rooted in some practical reality. And Northern Rock was rooted in the North East, a sort of building society mutual, you understood it. And then suddenly it becomes something virtual. I mean, part of the reason there were so many queues outside Northern Rock, there weren't many branches. And there actually weren't much bricks and mortar to it.
This idea of progress, I mean, does your government now recognise that actually the next generation will be worse off?
I think it depends. These are all, you know, very important policy choices that we have to make. And to go back to the Northern Rock thing again, where was the common sense in government, in the regulators that said mortgages of 125% of somebody's asset are not sensible?
How do the policies fit with what is the reality now?
And again, listening to Mr Darling talking about the fact that wouldn't it be lovely if we could be spending more money on a fiscal stimulus, where does that money come from? Is it right? And I know Martin's going to disagree with me because he always does. Is it right to burden the next generation with this generation's debt? It would have been lovely to have money in the bank to do something when this financial crisis hit, but because of the policy decisions of Alistair Darling and Gordon Brown, there was nothing left in the coffers. The coffers were bare. So what are the policy choices? The choices are to make sure that the banking industry is safe and well regulated and taxed, and that people who have missold pensions deductions or fiddle the libel rate are prosecuted, which they can't be done under the current system, and to make sure that that utility works for the benefit of all of us.
We could be sitting here in another 5 years and saying we were only halfway through.
I think that two very quick things. We can grow again. Underlying technology should allow us to grow again. So I don't believe that this generation is definitely going to be poorer than the last one. It might, but that will be the result of mistaken policy decisions. In my very bad mistakes. My view, very strongly, is that one of the mistakes in this situation, when it was clear that the private sector was going to retrench for years, is the public sector doesn't. And where's the money going to come from? The government right now can borrow at the lowest rates in the entire history of the United Kingdom. And you're telling me that it can't borrow? It seems to me completely mad.
You would borrow if you could invest in productive assets. And
I
we
would
have
borrow even to spend more on...
to show that the last government borrowed to basically waste.
We've run out of time, but thank you all very much indeed. Thanks for coming in.